Good evening, everyone, and welcome to our Luxcess Group Market Review webinar. Guys, welcome. I trust you have all had a fantastic week in the markets since I have all seen you last. It's been a brilliant week. We've had some fantastic movements, some interesting fundamental developments as well. And I look forward to sharing those with you as we go through this evening's content. So guys, how are we all doing? Fantastic, great to hear. So it's been a week since I have seen you all last, and guys, we've had some interesting movements in the market, and I want to start straight away going into last week's technical movements. So of course we had planned a position on the US dollar Swiss. So first of all, let's go over to the US dollar Swiss, and oh, I'm not even broadcasting. Good evening, everybody, and welcome to this evening's webinar. My apologies, I didn't have the record button the first time round. So, welcome everybody, and it has of course been a week since I saw you all last. So we've got some brilliant and interesting movements to take a look at in the market. We've got some interesting fundamental events to take a look at as well over the course of this evening's webinar. So we're going to waste no time at all, and we will get straight into the markets. So starting off, guys, we have we will start with the position that we analysed last week within the markets. We were looking at a potential position short on the US dollar Swiss. Now, the reason why we were looking at this position is I want to take it up to a higher time frame and show you this market behavior that we were looking at really around this current price area. So with this position, we were looking for the rejection off of this price area. We also took a look at the dollar index, and I want to take a quick look at the dollar index with you, just so that you can see what we were looking at. So we can see this previous area that we have, again, almost around this current price area of this support that's been played, this support role that's been played over this area of consolidation. And we were expecting to see a bit of a profit take within the dollar index off of this price level. Now, unfortunately, we didn't see that. We have seen, you know, the US dollar index progress again and again through each resistance barrier. And last week was a fantastic week for the dollar. We saw day on day gains for the US dollar across the markets. So we were looking at the US dollar as a whole. We were looking at the dollar index, and we were looking at the behavior of the US dollar Swiss. And this prompted us to look to place our sell position within the dollar Swiss. So we were looking around an entry around this current price level towards the highs of this supply area. And the reason why we, of course, refer to it as a supply area is, of course, this is where the sellers come into the market. So we want to incorporate these levels over to the side, and you know, this is where we're looking really around. Oh, apologies, let me just move that slightly higher. There we go. About the 99.80 price level is where we were really expecting to see that selling pressure come back into the markets. And initially, we started to see some technical confluence. What we started to see was, as the price moved up on the Monday and the Tuesday, is we saw our trade triggered. And then we saw this pullback below this supply area. So initially it triggered us into our trade position. We had had the rejection that we anticipated, and everything was looking good. But unfortunately, what we saw, and if I take you back to the dollar index, what we saw on the dollar index, apologies, let me get rid of that. What we saw on the dollar index is we saw this relentless buying coming into the US dollar. And this didn't stop the US dollar. This stopped the US dollar from selling off. This kept the buying pressure within the US dollar. So unfortunately, this saw some unwanted buying pressure coming into the US dollar Swiss. And as a result, on the, I believe it was on the Tuesday, Wednesday, Thursday, yeah, on the Tuesday, we were stopped out of our position. And yes, again, on the Tuesday, we see that, and if I zoom in a little bit more for you to see, we see that on the Tuesday here, we saw that the selling pressure came back into the markets, and we fell again back below this supply area. So again, technically, everything was trying to move in our favor. The Swiss franc was strong last week, as we anticipated. We anticipated the Swiss franc to be strong across the markets, and that there would be potential opportunities with the Swiss franc. But unfortunately, this buying pressure that came into the US dollar, unfortunately, that stopped us out of our position. And now we're starting to see this reversal behavior occurring. But for me, I'm not interested in the US dollar Swiss anymore. It didn't meet our expectations. It doesn't meet the criteria now. Although we have a 3 candlestick reversal formation here, it does not meet the criteria for a sell position, because we are still trading above this 99.80 price level now. We're still trading above this area of supply. So we may well fall into this area of supply next week. We may see the dollar fall against the Swiss. I would expect the Swiss to continue strengthening throughout next week. So there could be some good opportunities to buy the Swiss franc. So keep an eye out across the markets there. But in this instance, unfortunately, it didn't meet our expectation, but not a problem. Our risk is managed. Myself, I only took a controlled loss of 1% on this trade position. So not a problem. We go again. So today, guys, I have a few positions that I want to take a look at within the markets, and I want to share with you this evening. But before we do that, we're going to take a quick look at the fundamentals and the data that we saw released to the markets last week. Before we move on, everybody, do any of you have any questions? Does anybody have any questions about the trade position that we were looking at last week? So if you do have a question, I'll give you a moment to write that out, and then we will move on to the fundamentals. And then, of course, guys, once we've covered the fundamentals, we'll take a look back at the markets for the week ahead. Okay, fantastic, brilliant. As always, if you do have a question and you do think of anything in the webinar that you would like to ask me, please don't hesitate to pop a message into the chat and we can go through any questions before we move on. So last week, guys, interesting week last week. We started off fairly quiet. Monday was a very quiet day in terms of fundamental data events. We didn't have any major events scheduled for Monday, so it was fairly quiet. We didn't have too many worries there. We had the freedom to place any trade positions throughout the market, and this data that we expected here, this data was very unlikely to impact any positions. Of course, it's low impact data. We did have some medium impact data, but everything else was low impact. So we weren't expecting too much volatility in the markets on Monday, and guys, that's what we got. It was a fairly steady day. Moving into Tuesday, we did start to see some big data announcements, and we saw the Reserve Bank of Australia, the rate statement take place in the early hours of Tuesday morning. This took place at 3:30 a.m. UK time. So this happened within the Asian market session, and guys, just take a look over at the charts, over at the Aussie dollar over Monday, Tuesday and Wednesday, and just look at the price behavior of the Aussie dollar. The Aussie dollar weakened off significantly throughout the week, and it was by the end of the week it was very, very weak indeed across most of the currency counterparts within the market. So we had some very bearish data coming through for the Aussie dollar. First of all, we had retail sales month on month, which is this data here. Retail sales month on month data missed the forecast. The forecast was 0%, flat rate of 0%, and it came in at minus 0.4. So a disappointing figure for retail sales, and a very bearish rate statement for the Aussie dollar. Although they didn't change the cash rate stayed at 1.5%. The rate statement was very bearish. It was a very dovish outlook for the Australian economy, and as a result, the Australian central bank governor has stated that the bank may need to take more precautionary steps in the midst of the current global uncertainties and the current economic slowdown within Australia. So what we may possibly see is we may start to see a move in interest rates over the next coming months. This may be hinting that the governor of the bank of Central Bank of Australia may be willing to go into the different monetary policy tools that he can use, and maybe start to lowering interest rates to influence consumers to spend more money. So we saw the Aussie dollar very weak throughout last week. And because of this rate statement, and the outlook for the bank over the next few months, I feel that there's a good opportunity to take a look at the Aussie dollar within the markets this evening. So I've got a chart for you there, guys, and we'll get that in. We'll get to that in just a few moments. So into Tuesday afternoon, we had ISM non-manufacturing PMI data for the US dollar. Again, fairly disappointing data for the US dollar. Missed the forecast. The forecast was 57.2. The previous result was 57.6, and this result was 56.7. So although we were expecting a decrease on last month's figures, we again missed the forecast. So it was quite disappointing figures there for the US dollar. But even still, the dollar index still posted a positive day. So moving into Wednesday, we had Governor Lowe speaking for the Reserve Bank of Australia, and he was speaking at a national press club. Now, we did see a little bit of movement within the Aussie dollar off of this event, and the only reason was because of the only reason why we did see that movement from this event was because of that rate statement that we saw on Tuesday. Because of the Reserve Bank of Australia's rate statement we saw on Tuesday, and how the bank is potentially going to look at taking accommodative measures, we did see a little bit of volatility off of the back of this data release. And this was because of the questions that the audience asked about Tuesday's rate statement. So when this was taking place, the audience were asking questions about this, which is why we saw that volatility within the markets. Usually, we wouldn't expect to see that volatility. So moving on, we saw Donald Trump deliver a speech titled The State of the Union Address in Washington, D.C. And this didn't really move the markets too much. This is just a speech that Trump was making within Washington. We didn't really see too much volatility within the market. So although it was high impact because President Trump was speaking, he didn't say anything of interest, really. And I mean that towards the market participants, towards you and I. He didn't say anything of interest that can move the markets. So we saw a very small reaction with that. There wasn't very much that took place. Moving into Wednesday evening, we saw employment change and unemployment rate data. Again, some negative data there. We've seen some disappointing data all round for the major currencies here last week. We haven't really seen any positive major data. It's all been pretty bearish and pretty disappointing. Something to take a look at, guys, something to notice, that across the Aussie dollar, across the New Zealand dollar, across the US dollar, the macro data that was coming out of the markets last week was all largely negative. Now, we've only got to Thursday, but let's see if this continues. So Thursday at midnight, we had Fed Chair Powell speaking. He was making remarks at a virtual town hall meeting for teachers nationwide. Guys, this isn't something that's going to move the markets. What we're looking for is monetary policy. Okay, we're looking for those monetary policy statements. So we're looking for policy statements, we're looking for rate statements, we're looking for economic health reports, or treasury reports, or something like that that indicates what the central bank's monetary policy stance is. So this was just a speech at a virtual town hall meeting where teachers nationally attended. Most likely very similar to a webinar, what we're doing this evening, guys. Maybe something very similar to that. So something like that, not going to move the markets. And as a result, we didn't see too much volatility with the US dollar. So guys, just something to remember. When we see the central bank governors speaking, when we see the central bank governors speaking, we want to look at what they're speaking about. And if we expand the folder here and open the detail, we can see the description. And this tells us what or where they're speaking. And if it's nothing to do with monetary policy, then we're likely to not get that reaction. So if it's monetary policy, then we can expect volatility. If it's not monetary policy, it will be quite calm, and we're likely not to see much of a reaction within the markets. So moving into Thursday, we had some Bank of England data that hit the markets, and guys, this did move the pound. Take a look at the pound charts and take a look at Thursday midday. The pound immediately started to sell off, and then the buyers came back into the market and pushed the prices higher. And it was a very strong finish, a very strong close to the day for the pound sterling. And that, guys, is the power of monetary policy decisions. That is the power of monetary policy decisions. Take a look at the pound, guys, on your charts and see on Thursday afternoon at 12 p.m. So 12 p.m. UK time. For those of you within Europe, you may be an hour ahead of UK time. So this may have been 1 p.m. on your charts. So if you take a look at that reaction, you'll see how powerful these movements can be. And this was a prime example of it on Thursday. Although they didn't change the official bank rate, although they didn't change interest rate, it was the monetary policy summary, which is where we saw the movement for the pound. It was this summary and Governor Carney speaking afterwards. So the governor was speaking that initially, although the bank has took protective measures, they've taken accommodative measures. Although the bank have taken accommodative measures, they feel that potentially they won't have to use the full extent of those measures. So basically what they were saying is, we've prepared for the worst case scenario, but we may not necessarily have the worst case scenario. So there could be a little bit of room for maneuver with the Bank of England, because they've planned for the worst case scenario, and we're likely not to get that. So that gives the Bank of England a little bit more room to play. And this sent the pound to the upside. The buyers came into the pound, and we saw some very strong days for the pound, especially over euro pound and the pound US dollar. So Thursday was a very interesting day for the pound there. And then finally on Friday, we had a monetary policy statement for the Aussie dollar. And I'm not sure why there was an alert on there. Usually they break down the alerts, but there wasn't really one for this. But again, it was a very disappointing monetary policy statement. So again, the Aussie dollar has some very bearish data. It has some very disappointing data, and I think, guys, we can look to exploit that for the week ahead. So we'll take a look in one moment. And then, of course, finally, the Canadian dollar, we saw some good employment change data there, but ultimately the unemployment rate has increased. So although they added more jobs than they expected to, the unemployment rate also increased. So although there was a good snippet of news in there for the Canadian dollar and the Canadian economy, that was overshadowed by the unemployment rate data that missed the target there. So guys, let's move into the week ahead. Let's take a very, very quick look at the week ahead, and let's look to the markets, because we have a couple of great opportunities that I want to take a look at with you. So tomorrow morning, we have data for the British pound. We have gross domestic product, which is GDP, month-on-month data. We have manufacturing production data and prelim GDP quarter-on-quarter. Now, I want to just show you guys that, you know, these are not expected to be good figures. The previous figure that we had for GDP month on month was 0.2%. This time round, we're expecting 0%. We're not expecting any growth month on month from our GDP. So manufacturing production month on month is expected at 0.2%. And if we look at the recent results, they've been very disappointing for manufacturing production. So it is likely that we may miss this forecast of 0.2% and see figures similar to what we're seeing, you know, down here, the -% figures. And then finally, prelim GDP quarter on quarter. Although we had some good figures last month at 0.6%, it met our expectation. But this time we're only forecast 0.3. So although it met the forecast last time, we've revised that forecast to the downside. So we're expecting less growth quarter on quarter for the pound. And of course, guys, this is in amongst Brexit. Of course, we are approaching the deadline for Brexit. So we are, again, starting to see the factors of Brexit, you know, taking effect. We're starting to see the GDP figures have been revised down. Of course, this is always expected with such events taking place. But you know, we're now starting to see what was expected. We're starting to see that coming into the markets. So Wednesday is a very busy day for the pound, so maybe the pound isn't something that we'll look to trade Monday morning. Moving into Tuesday, we have Governor Carney speaking for the Bank of England, and Governor Carney is speaking at, if it will show me the events. So there we go. Apologies for that. A little bit slow loading up there. So he's due to speak at the Economic Outlook and Global Trade. Due to speak about the economic outlook and global trade tensions in London. Okay, guys, this is something that could be of interest to us. This is something that, you know, we might start to see Carney speak in regards to Brexit. Of course, he's looking at the economic outlook and the global trade tensions. Now, the global trade tensions are going to only increase, of course, if the UK leaves the European Union with no deal. The UK leaving the European Union, of course, is increasing global trade tensions anyway. So there's there could be some movements in the markets from this speech. So again, Monday and Tuesday, it might be a little bit volatile for the pound sterling. Okay, now, guys, this is to say that, you know, each and every one of you will have your own preferred style of trading. Some of you may prefer the volatility. Some of you may prefer the volatility that data brings, very quick, powerful movements that create scalping opportunities. Some of you may, you know, like that volatility. But for me, personally, for planning positions for the week ahead, of course, it's a little bit difficult with that that level of volatility. So that's why, you know, we don't look to trade the data or look to plan any trades around the data, you know, on the weekends in our webinars. Moving into the evening, we have the Chairman of the Federal Reserve, Governor Jerome Powell, speaking. And he's due to speak about economic development in high poverty rural communities. You know, I wouldn't expect something like this to affect the markets. He's speaking about the, you know, the economic health of, you know, on a state-to-state basis within the USA. So it's not talking about the USA as an overall. It's, you know, he'll be looking to, you know, to look at high poverty rural communities and really, you know, delivering a speech at how the Federal Reserve can help those communities. So although, you know, it's an important piece of data, you know, the Chairman of the Federal Reserve, it will be speaking about how we can help and how the Federal Reserve can help these high poverty rural communities. It's not something that's going to move the markets. Okay, so we should be good for the US dollar for Tuesday evening. Nothing major there. Now, guys, this is some powerful data. So we have Governor Orr for the Reserve Bank of New Zealand. I think it's actually, yeah, Reserve Bank of New Zealand, sorry. And again, although we're not expecting a change in the official cash rate, that's expected to stay the same at 1.75%. It's this monetary policy statement that is accompanying the official cash rate, where we've had this such bearishness, or more appropriately, this dovishness from the Central Bank of Australia, from the Reserve Bank of Australia. We might start to see this coming through to the New Zealand economy. The New Zealand and Aussie economy are very similar in terms of how they are made. Of course, the trade, the levels of trade, who their trading partners are, their trade deals, all very similar. And of course, you know, they're commodity exporting countries, both Australia and New Zealand. They both have very similar natural reserves, such as iron ore and gold and silver. So they're very similar economies. So Wednesday, guys, we might see the New Zealand dollar start to go the same way as the Aussie dollar. Okay, start to slow down, and we might start to see some words from the central bank governor speaking about that accommodative stance once again. So Wednesday evening, guys, for the New Zealand dollar is going to be very, very volatile indeed. So please, guys, please be very careful with the New Zealand dollar on Wednesday, in the early hours of Wednesday morning. Moving on, we have the inflation data month on month for the US dollar and core inflation month on month. Again, I wouldn't expect too much volatility from the US dollar. Anything that, as long as you're not trading on a short-term basis, your trades shouldn't be too badly affected by this data release. This is quite a consistent data release in terms of the results. Tend to be fairly consistent with inflation month on month. So we don't tend to see too much, too much in the way of volatility for these data releases. So we should be pretty good for inflation on Wednesday afternoon. And then we have Governor Orr speaking for the Reserve Bank of New Zealand, due to testify before the monetary policy on the monetary policy statement. Again, guys, this monetary policy, this is something that could potentially move the markets. He's due to testify before the Finance and Expenditure Select Committee about this rate statement. He's due to talk about this rate statement that they make on Wednesday. He's due to speak about it in the evening. So again, something that we want to bear in mind, and there will be volatility there for the New Zealand dollar. Then, guys, just into Thursday and Friday very quickly. Core retail sales month on month, PPI month on month, and retail sales month on month. Again, pretty disappointing figures are expected. We've seen these, we saw such bullish data for the US dollar throughout 2017, throughout 2018. But what we're starting to see is we're starting to see that slow down ever so slightly now. And again, we're starting to, we're seeing that follow through with these very lackluster forecasts, 0%, 0.1%, and again 0.1%. Not expecting very much there for the US dollar. And then finally, guys, retail sales month on month for the pound sterling. Very disappointing last time round. We went from 1.4% to 0.9%. Very disappointing figures indeed. Expected at 0.2% this month, so we're expecting a good figure above last month. So again, we might see some volatility there on Friday, but it won't be much compared to what we'll see really Monday for the pound. Monday morning for the pound is going to be quite volatile with this data here. So guys, we've got the fundamentals out of the way and done with now. We have guided ourselves through. We know what is occurring next week. We have some data with the pound first thing Monday morning that will move the pound. We have major data for the Australian dollar on Wednesday, and again we see Wednesday evening the central bank governor addressing the market. So again, we want to be cautious with the New Zealand dollar there. And then finally on Thursday, we have the core retail sales data for the US dollar. So there's a few bits of data with the pound, with the New Zealand, with the US dollar, that, you know, we do need to be a little bit careful with. So the pound and the New Zealand especially is Monday and Wednesday. So, you know, it wouldn't be good for us to look to plan a position on the pound for tomorrow because of this data, because of these data releases here. So we want to bear that in mind, and maybe we want to look away from the pound for the moment. So what I want to look at first of all, guys, is I want to look at the euro yen. Now, the euro yen finished off last week. Very interesting indeed. Since we had the flash crash not too long ago. So where was the? There we go. We saw the euro yen sell off hugely, and we saw the flash crash right down to 118. Since we had this flash crash, we've been accumulating orders in this area here, and I want to take a look within that and show you guys what is going on at the moment. So last week we saw that movement out of this price area, and here since this movement, and this is where we closed on that day. So just so that you know where that line is starting from, that's on the close of the flash crash day. Okay, that's where the market's closed on that day. So that's where we're starting this trend line from. And on the 4 hours, you can see that we come up to the 125s and hit the lows again, the 125s, and again we come down to test these lows. Again, the 125s, and we test these lows. Then we finally break the 125 up to 125.90, up to 126, and the sellers come back into the market once again, and they push us down to this support channel. But then the sellers break through that area. And again, guys, I just want to zoom in so that you can see a bit clearer what we're looking at. So again, we see the price approach this level, and we see the consolidation. We see the buyers and the sellers going to war with each other. And here we see the sellers emerge victorious, and the sellers push prices below that support channel. So we've broken this support channel on the euro yen, and it's looking pretty bearish indeed. And if we look at the euro across the board, the euro is not looking too sprightly. We've got a lot of economic events taking place within Europe at the moment. We have troubles ahead with Deutsche Bank. Of course, Deutsche Bank are struggling. If you look at the share price has decreased significantly over the past few years. We've got troubles, of course, within France, and all of the protesting that we're seeing for, I believe it was the 13th weekend in a row, we're starting to see. And all of this, guys, is raising tensions for the euro. And of course, we are approaching the end dates of Brexit as well. So there is a lot of uncertainty ahead for the euro. And fundamentally, so we're ticking the box fundamentally. We've got some very bearish macro data. Technically, we look fantastic. Let's zoom in and take a closer look. after this bearish movement to the downside, we've seen this order accumulation, and now, guys, what we're likely to see is the sellers come back into the market and start to see these lower prices continue. So I think there's some good opportunity here for us. I think there's some good opportunity to look for a position on the Euro Japanese yen, to look for a sell position over the Euro yen. And for me, guys, I would be looking around the 125 handle. Now, although it's 80 pips away from our current price, apologies, guys. Let me just compact the charts a little bit. There we go. So, although it is 80 pips away, we are trading at the low of last week. Now, again, this is what we were saying. Technically, it looks fantastic. We've seen this order accumulation. So this is the retracement behavior, and now we're looking to continue to the downside. So technically and fundamentally, both ticking the boxes. And this is what we need, guys. We need to be able to build an argument for the position that we take. We need to build an argument fundamentally and technically on how do we analyze the markets, how do we take our positions. And don't worry, guys, we will show you just how we do that. So onto the daily. This 126 area, 125 area, sorry, although we're 80 pips away, the Euro yen does move a lot throughout the day. It does have quite a large range, so it shouldn't take us too long to see prices get back up to that 125 handle. And the 125 handle has offered us some fantastic support, some fantastic resistance in the weeks before. So we're looking for that role to play out once again. We're looking for the 125 resistance to come into play and the sellers to sell off from that level and move down towards the 123.50s. So guys, let's take a look and see if we can get a stop loss for this position. See if we can get see if we have a nice stop loss, technical stop loss for this position. Well, immediately we have this order accumulation over this level, so we don't have a swing on the 4-hourly within the market, so we can look to use. Of course, the last swing that we have is here over the 124.60s. I would expect the markets to break this level and test that 125. So really, for me, guys, I would be coming over to the left-hand side and looking at the previous highs. Now, 125.80 or 125.95, the highs here. Yes, that is our last high, but for a stop loss, it's quite a large stop loss, and I think we don't need a stop loss that large when we've got multiple areas of resistance in the way. So what do I mean by multiple areas of resistance? Again, let me show you. We have this 4-hour channel. So we have what I would expect is to see prices start to do this. To come back up, to retest, or maybe to accumulate maybe into over Sunday into Monday, but then to go up and to retest this area, to retest this trend line. So we have this tested as support. Now we've broken through it, I would expect it to be tested as resistance. So again, I'm just going to extend that wide. So I think if we look to use these levels over here to look to use, you know, the 125.30, the high over at this level and the high at the 125.46. I think if we look to use these levels, it could offer us a good stop loss from our position. So, you know, this is what I, oh, apologies guys, that's let me delete this quick. There we go, that one. So what I would expect to see from here is to, you know, to then see the prices come back down from this level, and ultimately for us to create a new low down towards the 123.50s. This would see us create a lower high, and of course, you know, on the daily anyway, if we zoom out, you know, we're in this bearish price action anyway. We're in this very bearish price behavior. So we're expecting to see that continuation. And this is what I would expect to see for the week ahead. So for me, guys, I'm looking to enter a position on this at a sell limit. I will look to place. So I'll look to place a sell limit just below that 125 level. So about 124.95, just below that 125 level. 124.95. So, of course, my stop loss, we've identified the level at what I'm going to place my stop, and this is above these highs over here, above 125.50. This gives us a good area for a stop loss for this position. We have the 120, we have the previous resistance levels here at 125.45, but before we get through those levels, we would have to break this channel to the upside. And, you know, given the significance of this channel, you know, don't really see that happening. So we've got a great opportunity here. So 124.50 for my stop loss, just above that that level at 124.45. And then finally, guys, in terms of profit, I'm going to look to just come above that low there at 123.45, and I'm looking to take profit at around 123.55 for this position. So label profit target 123.55. So here is our position for the euro yen, and this is what we are looking at. So guys, if you want to take a picture of that, please do, or take a screenshot. And guys, we will quickly move on to the position, that's the next position that I have lined up for us this evening. Of course, mentioned throughout the webinar, the Aussie dollar, the weak Aussie dollar. I feel that we have some opportunities to take advantage of this. So with the weak Aussie dollar in mind, with that bearish rate statement from the Reserve Bank of Australia, I think there's some good opportunity to look for short positions across the Aussie dollar. And for me, the the Aussie dollar against the US dollar was for me the opportunity that looks technically you know, the most potentially profitable. I think we have a good opportunity here with the Aussie US dollar to short from around that 0.7140s, but we're going to go through it step by step this evening. So if we just take a look at the macro picture, we can see, you know, the sellers have been in the Aussie US dollar since, you know, since early 2018. 2018 was a very bearish year for the Aussie US dollar, starting off at around the 80 level and closing down towards, you know, the current market price around the 70s. So we saw about 1,000 pip drop last year for the Aussie US dollar. It's a very powerful movement to the downside, and we're starting to sort of play with these lows at the 70-30s again. Now, we haven't quite made it here just yet, but I think it's not long before we do. So with this in mind, looking at the bearish statement from the Australian Central Bank, from the Reserve Bank of Australia, looking at the bearish sentiment with them, looking at the current technicals on the Aussie US dollar, I think there's some opportunity to look for a short-term position to the downside. Apologies, let me just get the charts back. There we go. So we had a fairly neutral day on Friday, a fairly neutral close to Friday. Although, you know, we did see the sellers come into the day and we were trading down at the lows here at 70.60, the buyers came back into the market just to pull us above that previous support area. And again, this previous support area here. Now, we started to see the buyers come back into the market, but guys, any buying that we see with the Aussie dollar is likely to be profit taking. The reason being is, of course, the fundamentals for the Aussie are not very good at all. They're very disappointing, as we've gone through this evening. So any buying that we see within the Aussie dollar is likely to be profit taking. And what this does is this offers us a better opportunity to sell. It offers us the opportunity to sell for a better price. And this is what we're going to look at this evening before we finish up. We're going to look at the Aussie dollar short. So what we're looking for, guys, is on this Aussie dollar, there's an area that I want to take your eyes to, and it's between, apologies, it's between the 71.44 and the 71.66. Now, it's only about 20 pip gap, but we have a lot of uncertainty within this price area. As you can see, we have the lows and closes of these days, and then the lows of the daily price action over here. Again, we see the lows of these days and the close of the day. Again, the highs of the days here, and then the highs and the closes of those days. The lows here, again, the low of the day and the close of the day. So we see this zone between 71.44 and 71.66. And guys, I think there's some great opportunity to pick up a short position around this area. Now, we saw on the weekly that it was a very disappointing picture for the Aussie dollar, that the sellers, you know, were firmly in control. And I would expect that to continue. But what we might see on Monday or Tuesday is a slight profit take, or this slight profit take continue, maybe up towards these levels up here, up towards the 71.40, up towards the 71.66. So for me, guys, I'm looking at a sell limit around, you know, between these levels. For me, the 71.54, around that price level, incorporates all of this price behavior. And for me, just ensures that my order will get picked up within the market, because I don't want to place right up to the 71.60s and then for the price not to get up to that level. Likewise, I don't want to enter at 71.40 because I think I can get a better price on this. So about 71.50, 71.55 is where we're going to look to place that position. So if we go on to our labels and get our label up just so that we can see that on the screen, we're looking for a sell limit on the Aussie US dollar, and we're looking for a sell limit at 0.7155. And I'm just going to do this all in one label. Obviously, it saves a little bit of time. Next, of course, we need stop loss for our position. So what I'm going to do is just pop that to the side, and we're going to look on the lower time frames for potential stop. See, we're starting to see the sellers come back into the market now, and this could be retracement behavior. But I don't want to enter just yet, because of course, I feel that we can get the better price up towards these levels. So where am I looking at for in terms of a stop? Well, if I'm entering at 71.50, then, you know, the 71.60s and the 72 handle are my next two areas of resistance. And we can see the resistance at that 72 level. So I would like to just place my stop just above these highs here and just above the close of these candles here. So you can see there's some good roll reversal over this level. We had the movement to the upside. We had that roll reversal, but then of course we saw the sellers come into the market and the price, of course, sell off. So for me, that 72.01 level is looking good for a stop above there. So apologies, guys. My let me go back to the Aussie US dollar. I'm not too sure why it's taking me away from that. There we go. So I'm looking for that stop loss above that 72 level. So once I find my label again, which is what I was looking for the first time round, it appears to have gone. So let's do that label again. So we're looking for a sell limit at 71.55 for our position. Just before that 71.60s, just above the 71.40s. So then for our stop loss for this position, as identified, we want to just place our stop above that 72.01 resistance, that previous resistance level that we then tested as support, and then we broke through that level. So we just want to place our stop above that level to give us a bit more protection for our position. So 72.05, giving us a stop loss of about 50 pips for this position. And then in terms of profit, guys, where are we looking to go? Back on to the daily, first of all. Oh, and there was a previous label. So back onto the daily, really the next immediate area is going to be down towards these previous lows back in October, November time. We may see the sellers push prices down towards, towards these levels here, towards the flash crash levels. But I would expect to see some buying pressure come back in from this level. So, we may see some consolidation. So again, what we may see within the price, just to give you a bit of perspective on what I'm seeing here on the charts, what we're likely to see, probably a movement back up this way. Retest of the support. And then, down towards this support level here. Now, as mentioned, we could fall even further down towards this support level here, but for me, I don't want to be too greedy. We have a good opportunity from the sell limit at 71.55. Don't forget our entry's going to be up at this level up here. So by the time we see prices down to this 70 price level, there's 75 pips on the table there, 85 pips on the table, sorry. So there's some good potential profit here with the Aussie US dollar. So in terms of profit, to just finish off the label, profit target is at just above the 70.68 at 70.70, giving us a potential profit on this position of 85 pips. So position 85 pip stop loss, around 55 pips of profit. So a good position if our expectation is met. So guys, we have some brilliant positions here with the euro yen and the Aussie US dollar. For me, the euro yen is my main play for the week ahead. This is going to be the trade, which is going to have my main focus, my main attention. The trade that we went through together earlier, just because it's got a much higher probable structure. Okay, so we've got a good support structure here with the euro yen. We broke out of that structure. We're looking for the role reversal and then our position. And then with the US dollar, with the Aussie US dollar, we're looking for similar behavior. We're looking for that profit take to pick up our order and then for the sellers to come back in to the markets. So these are my positions that I'm looking to take for the week ahead. Unfortunately, of course, we didn't meet the expectation last week, but guys, our risk was managed. We go again, and the euro yen is going to more than make up for that once that meets our entry and meets our profit target. Guys, do you have any questions for me this evening? Just pop a yes or a no in the box. So just a question regarding the euro, euro yen. Yes, apologies, guys. 1 moment. Stop losses were well pointed out. That should be 125, 125.50 for the stop on this position. Apologies, guys. That was a typo on my end. So the euro yen Sell limit at 124.95, stop loss at 125.50, looking for a target at about 123.55. This may take a few more days to meet this expectation, but if it does meet the expectation, we've got around a 50 pip stop loss for about 140 pips of profit. So a fantastic potential reward for the risk on the table. So guys, if we don't have any more questions, very well done this evening, and we will leave it here for the time being. This webinar is recorded, so if you would like to watch it back, if you would like to re-watch it, then you will be able to. The link will be ready for the webinar recording in about half an hour. So I'm sure Bex will pop that into the groups for you. Thanks again, guys, for your attendance here this evening. I wish you all a fantastic and a profitable week ahead within the markets. If you have any questions, don't hesitate to send me a message. I wish you all the very best. Thank you and goodbye for now.